Hey guys, Boris Lasser with BK Forex. Welcome to the Forex Weekly Technicals for Euro Dollar, Dollar Yen, and Pound Dollar for February 20th to 24th. Don't be lulled is the theme this week. And this week I want to do something a little different, and I want to incorporate a little bit more of event risk into the charts and take a look at some of the different charts just to sort of give you an idea of a richer context. Because I think one of the more interesting things that's happening, of course, in FX is that we literally have not had any serious event risk over the last couple of weeks, which is why you're seeing such low volatility all across the spectrum. And my key message this week is that I think this volatility, probably not next week, but maybe the week after that, we never know, is going to break. And it needs to be very, very important to watch the key levels around which this volatility breaks in order for us to be prepared for the right trade setups. So first, let's take a look at just the calendar and the majors this week. And it's very, very quiet. You basically have nothing on Monday because we in the US are off on a holiday. Tuesday, we have all the flash PMI data out of Europe, which is kind of interesting, but it's essentially going to, I think, pretty much confirm that Europe is more or less doing relatively well. I think the only possible surprise here is if the economic data starts to falter in Europe, that could put even more pressure on the European currency, because the big pressure on the European currency right now is the political risk coming out from the elections in the Netherlands and the elections in France, with the populist parties still seeming to show a lot of strength. So if you get a double whammy of slowing down of economic performance as well as the populist rising, that's a very nasty little mix, and that could be hurting the euro going forward. The only event of any consequence this week is going to be the FOMC minutes, only just because I think the market wants to see if the Fed itself is as hawkish as Janet Yellen was in her testimony. The big shock, the big surprise last week was that Janet Yellen was uber hawkish, essentially pretty much communicating to the world that she wants to do 3 rate hikes as the year goes by. Now, what was even more interesting is that despite all the uber hawkishness of Janet Yellen, the prices did not respond. And that's a very, very key tell. We're going to examine that in just a second. But I think it's a very, very important tell of why the dollar may not be performing as well as we think it should. Other than that, you can see nothing. There is just a smattering of, unemployment claims, revised U of M data, home data, nothing on the US side, nothing in European side of any consequence. So looking at the levels this week, I think the key things to remember is that Euro's kind of moved down a little bit in its support resistance. Now we're down to 105, 107 on the levels. Yen remains in this 111.50 to 115, and it's going to be very interesting to watch this. This chart is, I think, going to be the most interesting of the week. And the pound is teetering on this support level of 124, and that could be very interesting as well. So let's just take a look at the euro first. The thing about the euro is that it was a much more bullish chart just a couple of weeks ago, and now is starting to look much more like a failing chart rather than a upward trend. We still continue to, let me wonder if I can just pull this line up. Maybe I can't. No, I'll just leave it alone. We can basically see that we still continue to be in an upward trend channel, because the as long as the low holds here at around the 105.50 level, it still suggests that the euro is in a recovery mode with an upward bias. But this 105.50 goes, and really sort of if we get down to 105, which is the key support level, that would then change the whole construct of the chart to a failed breakout attempt and a very, very strong potential for a revisit of the 104 double bottom. So euro this week could act very, very, could be a very telling trade, simply because these levels are close. So we're going to be watching this 105.50, how well it acts this way. If it starts breaking down below that, you can pretty much abandon all hope and start to short the position with a target of 104. On the other hand, we kind of hold, consolidate here. I think there's a chance to the upside. But as I said to my crew, I do not want to be a buyer of euro until the market proves to me that it's ready to run, which means that I really want to see the euro break above 106.80. I would really like to see actually euro retake 107 before I want to get bullish on it, because at this point there is enough doubt in my mind, price-wise, that I don't want to take the risk on the euro bouncing back. I'd rather have the market prove to me that it is indeed resuming its uptrend and be a buyer on a breakout rather than a buyer on a pullback. Yen, on the other hand, is very interesting because it's really showing just how hard a time the dollar is having rallying. After last week's very, very bullish Yellen testimony and pretty decent retail sales, it's just shocking at how poor dollar yen is performing. And that, I think, is very telling. Whenever you get in a situation where the technicals are diverging from fundamentals. It's really valuable and really important to pay attention to the technicals because they're telling you something that you can't see, which is always much more interesting and much more important from a trading point of view. Something is going on here where the market does not like the dollar. Maybe it's political. Maybe it's the fact that the market sees slowdown in the U.S. growth. Whatever it is, you need to take this very seriously. And really, until the dollar yen takes out 115 to the upside, you basically assume that every rally is a sell and every pierce to the downside is a potential downward move further. 111.50 is the key support. That support goes, it really opens up the perfect way down to the 110 level. So I'll be watching that pair very carefully. That's going to be, I think, the key telling sign for the whole week. And then pound, of course, its own story. But the pound also, one of the interesting things about the pound is, of course, just the incredibly tiny volatility that we're seeing in the pound. I mean, look at this. This is basically a 100-point range. Pound used to do a 100-point range in a couple of hours. It's been doing that for the last month. But generally, when we see little volatility in the pound, it's always followed by large volatility breakouts one way or the other. The critical question here is, are we on the verge of seeing a volatility breakdown to the downside here? We're teetering, as I said, at around this 124 level. That gives way. We essentially have 123 as our near-term support, and then after that, of course, it's a revisit to the 120 to the downside. The story in the cable is that basically Brexit is starting to, I think, take a bite out of the UK economy, and the bloom is coming off the rose. People are beginning to understand the absolute serious impact and ramifications of having higher inflation, lower growth, and then while still being in the European market, and of course the absence of being in the European market is going to exacerbate the British situation to a far greater degree than I think anybody imagines. So maybe the market's starting to sense that. Cable failed so far pretty miserably, unless and until, and this is another one of those kind of things the market has to prove to me that it wants to go higher. Unless and until we really take out sort of 26.50 to the upside, cable also still looks to be much more of a sell in the rallies than anything else. So that's how the week shapes up. It's a sort of a very divergent story here. The dollar strength against cable and euro is what's pretty much obvious on the charts. Certainly cable being the weakest, euro being the second weakest. And at the same time, dollar weakness against the dollar yen. And all of those stories kind of taking their own shape and form as we go forward, and very much all worth paying attention to because we're coming up to some very key levels, even though there is very little event risk as the week progresses. Wish you guys the best luck, best trading. Boris Nossberg, over and out.